Welcome back. So like we've been telling you, cues across most Asian markets, barring Hong Kong, are actually pretty okay. There are some gains in Asia. Let's get the markets up. Yeah, the Hong Kong markets, not feeling too great this morning. Let's pull up the implied open. I mean, considering our run, this solid run of 7 straight sessions of gains, the implied open is suggesting that today there could be a bit of a halt on that, 47 points lower at this point. Well, apart from all the global cues, of course, lots and lots of earnings and stock-specific action to go over. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. First, let's recap the big earnings, then we'll come to the others. Mangalam, Tata Consumer, how did it look?
Well, it's largely in line with expectations. A few bright spots in Tata Consumer. So if you look at the revenue at 4,600 crores, the street was working with a number of 4,575 crores. The EBITDA, despite a 420 basis points drop in gross margins, it actually improved versus expectations. So 621 crores versus expectations of 600 crores, which meant margins came in at 13.5% versus 13.1% as well. And the net profit was a beat led by, better than expected EBITDA. But more importantly, there was a 45 crore exceptional gain that came in as well. India beverages, organic revenue grew by about 9%. The street was working with a number of 10 to 12%. But look at foods. There, the organic business was close to 17% in terms of growth. The street was working with low double digits. So that was an outperformance out there. Narishco as well. We were working with 8 to 10%. 10% is what the company reported. That's a positive. And Capital Foods in Organic India, the acquisitions that they made did about 320 crores in revenue. Again, better than as expected in the performance. International business, 5% revenue growth led by US and UK. We had non-branded businesses that did extremely well, 25% higher, led by higher realizations in coffee prices. The stock has done well this year, 24% higher this year with, trading at around 55 times FY27 price to earnings. So it's priced to perfection. So see mild green despite, numbers which are slightly better than expectations.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Rima. She's here to tell us about a couple of tech names. LTIMindtree. Rima?
Well, LTIMindtree was largely in line with expectations. The company's top line declined by 0.6% quarter-on-quarter. EBIT margins unchanged at 13.8%. The company said the quarter was impacted as ramp-ups of deals which closed in Q3 got delayed, and even some new fresh deal closures got pushed out. That said, in the conference call, they did say that they're hopeful that Q1 is now a growth quarter. Clients were cautious in Q4, but some conversations have started in Q1, and the company is hopeful the deal closures will happen in FY26. So Q4 muted on expected lines. Commentary about the upcoming quarter and the year seems to be a little more optimistic.
All right, Rima, thanks very much for that. So keep an eye out on this one as we open up. Bajaj Housing Finance and Canfin Homes are the next two in focus. Abhishek is here with details. Abhishek.
Well, Prashant, to begin with, Bajaj Housing Finance, the numbers are below analyst estimate. P&L versus Kotak Securities estimate does show that NI and PAT is below Kotak Securities estimate. Disbursements are strong at 25% growth YOY and about 13.5% sequentially. However, disbursements to AUM ratio has declined, and for last 4 quarters in a row, it's been on a declining trend, which suggests that the tenure of the book is also declining. AUM growth is healthy at 25.5% YOY and nearly 6% quarter-on-quarter, but they have lost out on spreads over the last few quarters. So spreads has declined to 1.8% versus 2% in the same quarter last year and about 1.9% in the previous quarter. Well, Canfin Homes, the PNL is ahead of analyst estimate, which I've taken into consideration. That is DAM Capital. NI is at 348.5 versus 345.7 crores estimate. PAT is at 234 crores versus 221 crore estimate. Net interest margin has surprised positively. It's at 4-quarter high of 3.82%. Disbursements have started to pick up. Sequential growth is at 30.65%. Remember that in Q3, there was a blockage with respect to registration in the key cities of Bangalore as well as Hyderabad. So AM growth has picked up 9.2% YOY and 2.9% sequentially. The return ratios are robust with ROA at 2.6% and ROE of 18.5%. And if you check, the asset quality has also seen seasonal improvement over here. Gross NPA ratio has declined to 0.87 versus 0.92% in the previous quarter. Back to you.
Okay. All right, Abhishek. Got that. Thanks very much. Let's get back to Rima. Rima, Persistent Systems. How did it fare?
Well, very good growth in Q4. So the company reported a top-line growth of 4.5%, slightly ahead of consensus expectations. And also bear in mind that most of the companies in Q4 have reported a top-line decline. And this is a company which has grown 4.5% in Q4. And for the full year, top-line growth stands at 18.8%. EBIT margins have expanded to 15.6% on expected lines. Deal wins are a bit subdued sequentially. If you look at the total contract value, the new wins, across the board, deal wins are down quarter on quarter. But the company, in their commentary, says that as we look ahead, we're optimistic about sustaining progress to reach $2 billion in annual revenue by FY27. So despite the uncertainty, they're reaffirming their guidance of $2 billion by FY27, and growth continues to be superior than peers.
Okay, all right, Rima. Thanks a lot for that. Well, I'm focusing on Dalmia Bharat, and the numbers were pretty okay. And the outlook should be better. That's why I'm going with green. No big shakes in the numbers, but I'm going with green because the outlook should be better from here on. And these numbers are more or less in line. On the top line, a small miss. Why was that? Because realizations were expected to go up on a sequential basis. Didn't play out for them. Also on volumes, it came down by closer to 3%. That's on expected lines. Because in the base year, there was tolling volume coming in from JPA, which wasn't there. Adjusted for that, actually, there was a mild growth in terms of volumes. Moving to the operational performance, actually, it was in line. You'll be wondering how. Because there's no operating leverage that played out. They didn't get the benefit of higher pricing as well, but they benefited on the cost side. So the cost of power and fuel as well has come down, which helped them on the operational performance. And just one factor that we'll be waiting by for clarity on is the other expenditure came down sharply. So that's what led to the EBITDA per ton moving up from around that 750 odd mark. It went up all the way to around 926 rupees per ton, which is a positive. The net profit number, though, looked much better. Effective tax rate was lower and depreciation was sharply lower as well, which explains why the profit number looks much better in comparison to our poll. They've also laid out a capex plan of close to around 3,500 crores as they're looking to add capacity. And now the debt number has come down to only around 700 crores. So balance sheet in pretty good shape. Going with green because the outlook should be better from here on. But there's a big deal that's announced earlier today, and Nimesh had given us a heads up about Samhi Hotels. Manglam joins us to help us out with those details. Manglam?
That's correct. You know, Nimesh had told us in D Street Chatter, and it's come true. It's announced a strategic deal with GIC where GIC will acquire 35% stake in 3 of the company's subsidiaries for about 752 crore rupees. This values that business at an enterprise value of close to 2,200 crore itself. And these are just the 3 subsidiaries of the company. They will use 603 crores of this to reduce debt. Remember, in FY25, their net debt is close to around 1,500 crores. So their debt comes down by that. And the remainder, 149 crores, will be used to fund capex in a couple of their marquee properties as well. The company said that on closure of this deal, their debt will reduce by about 580 crores. And their profit will increase by 15 to 20%. So this is obviously a good exercise when it comes to value unlocking and improving their balance sheet as well. How much of that is priced in will be the big question, because in the last fortnight itself, the stock is up around 23%. But it is strong tailwinds for the hospitality industry. Expect the stock to see some more green on the back of this deal announcement.
All right, Mangalam, thanks very much for that. So Samhi is a stock you must have on your radar as we open up this morning. Syngene and Biocon. Vinny is here with details on these numbers. Vinny, over to you.
Good morning. So Syngene, a weak set of numbers that came in from the company in Q4 FY25, and overall for FY25 also it was a very subdued year that came in for Syngene. Now in terms of revenue, especially for Q4, 11% growth in terms of revenues. Margins have seen a contraction this time. 33.7% is what the margins came in at versus last year 34.5%. Mainly pressure on the margins was higher employee cost. Overall change in mix is also something that is impacting Syngene's margins. So a bit of a subduedness that we saw in terms of margins. Profits of the company have seen almost a 2% decline as well this time. Now revenue growth this time was mainly only supported because of the CDMO side of the business that was doing well. Commercial projects were there, and there was a conversion in terms of inquiries that came in for the CDMO business into clients. So that was a bit of a positive on the CDMO business side, but other than that, muted performance. Now what's taking a bigger hit and why are we expecting red here is the guidance for FY26, a very muted guidance that is coming for FY26. Despite this being a year where we are seeing muted performance as a subdued year for the company, so FY26 revenue growth, they're expecting just a mid-single-digit revenue growth there. Base business also is seeing a growth of early teens is what they're expecting in FY26. EBITDA margins expected to moderate, profits expected to fall from these current levels as well. So FY26 not expected to be a great year. Biocon, on the other hand, we're expecting green coming in here. They've announced a raising of around 4,500 crores. This is going to be through issue of securities. QIP's right issue could be a possibility over there. So keeping an eye out on Biocon, expecting green here.
Okay, so Biocon green, Syngene maybe a little more red. Got it, Vinny. Thank you very much for that. Back to Abhishek. Abhishek, Spandana Spurti, the MD and CEO has resigned?
Well, yesterday in trade, you saw the stock decline massively despite the fact that Nifty was up 0.7%. So now we know the reason. Spandana Spurti has seen their current MD, that is Shalabh Saxena, place his resignation. He'll assist the company during his notice period. The president and CFO, that is Mr. Ashish Damani, has been nominated as the interim CEO to take over the reins during this notice period. The con call that they had for analyst community yesterday evening, he did say that they'll raise money of about 500 to 750 crore post the Q4 FY25 results, and this will be confidence capital as the CRAR, that is capital adequacy ratio, is already at 35%. Now the MD also did mention that he had been contemplating this move since last 6-7 months about the resignation, and now he's placed resignation at the company. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's do a quick recap of all the top stocks that we covered for you, the ones with positive news flow first. Tata Consumer, LTIMindtree, Canfin Homes, Persistent Systems, Dalmia Bharat, Biocon, and Samhi Hotels. While the ones with negative news flow include Bajaj Housing, we have Syngene, and Spandana Spurti. That's about equities. Let's turn our attention to the commodities market. Manisha Gupta joins us to tell us more what's going on there. Well, Manisha, when I woke up this morning, gold was down, but that was short-lived. Popped back up. Tell us more.
Oh, well, absolutely. Every dip is getting bought into. You're absolutely right. We saw an all-time highs of $3,500 an ounce. And from there, gold saw profit-taking, went to 3,260 on the lower side. It's trading at 3,340 right now. So, well, absolutely. $60 to $100 of a move coming in every day in case of gold prices there. Well, the dollar index is off its 3-year lows. There's a bit of a rally in equities. And the U.S. has expressed potential lower trade tariffs with China. That is what is keeping the gold prices in check right now. But various banks and brokerages who had earlier talked about 3,500 with that target done are talking about some profit taking in the near term. But they do expect that the year 2025, calendar year that is, will end with all-time highs in gold yet back again. What we are also seeing volatility into is the crude oil prices. Fell 2% overnight. Crude is, by the way, down 10% on months now. There are various statements from OPEC and allies suggesting that there could be an increase in output, not just for the month of May, but even higher for the month of June. And then the U.S. crude inventories also have seen a bit of a decline. Markets also are looking at potential trade negotiations with China. So all that premium that was building up in case of crude prices also seems to be going away. The only thing that actually has made a mark in the overnight trade has been the silver prices. 3.5% of gains overnight and continues to surge in Asia even now.
All right, Manisha, thank you very much for that. You know, that snap, gold lower and then gold lower last night, gold higher this morning. I think the difference is China. China woke up, Chinese markets opened, and actually that's been true for the last couple of days now. So demand out of Chinese markets quite very, very strong. And that kind of explains the pop higher that we saw early on. We'll take a quick commercial break here. We're going to come back. Aditya Khemka, InCred Asset Management, talks about stocks and stocks on the pharmaceuticals space and what he likes there. You know, this sword has been hanging on the pharma space for a while, these tariffs, sectoral tariffs, right? But lots of individual stock-specific developments as well, which we want to address. Deepan Mehta of Elixir Equities will be joining us as well. So stay tuned.